Forex Candlesticks Signals Lesson 1, Candlesticks. Candlestick trading is a very powerful tool in technical analysis. It provides us with great sentiment and market condition insights, and even signals trend changes and price reversals. Candlesticks originated in 17th century Japan, and it's believed they were used by rice traders to track historical price movements in the rice market. Now, it's become the basis of Japanese investment philosophy. Only as recently as the 1990s were the candlestick charting techniques introduced to the West by a trader named Steve Nyssen. Since then, candlesticks have gained huge popularity, and nowadays can be found in every charting platform. Here's a quick recap about candlestick anatomy. The big blocks are called real bodies. The vertical lines above these blocks are upper shadows, and the lines below are called lower shadows. For a bull candle, here is the open, low, high, and close. And similarly, if it's a bear candle, the open, high, low, and close are given. Large real bodies indicate strong buying or selling. Small bodies show that there's been low buying or selling pressure. Shadows indicate how high or low the price has been in a particular session. If the price is long, the traders push it back towards the opening price.